This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March the 1st, 2013. Our time is 8:41 in the morning Mountain, 10:41 Eastern. Our radio show runs. We are across Canada. We're on News Talk 1010 in Toronto, CFRB. We're also on 630 CHED Edmonton and News Talk 770 in Calgary. For those that are listening in Edmonton, we're on at a different time due to Oilers hockey. That will be the case next week as well. On from 2:30 to 3:30 in Edmonton. Keep that in mind, 2:30 to 3:30 in Edmonton next week. The radio show, obviously on the radio. We are online on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have those shows that you can stream there. We also have a podcast through iTunes. Harold does daily market commentary there. All you need to do is type in World Financial Report on radio. The radio shows and the commentary comes up. We're portable. We're on your iPhone, your iPad, your iPod. You can take our radio show anywhere you go through iTunes. As we start our show today, it's March the 1st. Sequestration in the United States is going to kick in. And we personally believe that it will have a huge impact on the economy of the United States. They're going to be laying off a lot of people. There will be some hurt. Also, as we tape our show, breaking, U.S. incomes have dropped the most in 20 years. As a result of the tax increases in the United States, the governor of Michigan to declare Detroit a fiscal emergency and take over. Eurozone jobless hits another record. You have youth unemployment in some countries at 60%, adult unemployment at 25%. Britain is sliding towards a new recession. And on top of it, in our newsletter this week, there's talk about Argentina possibly defaulting on the bonds that they need to pay out. Rick Santelli on CNBC said the paper gold market is suppressing the price of the real gold market. And Harold, this is something that has been happening here in the last little while. We've seen a consolidation in the gold market for quite some time, trading within a range. One thing we are hearing is heavy physical buying, people buying physical gold and silver all around the world. And for some, it's very confusing that we're seeing the price go down when that is happening. But as we've said, there's the paper market, the physical market. Eventually, because of the scarcity of that physical market, we believe there will be much higher prices. And everything we just talked about, the fundamentals have not changed at all for precious metals.
No, they haven't. But again, it is certainly disappointing to see the markets trading in this fashion. Again, with so much uncertainty in the market, you would think that the markets would rally, especially today with this sequestration going on at this point because of the uncertainty that, the stock market just went positive. It's an unbelievable thing when you really think about it, Randy, that with everything happening in the U.S., that there's going to be about 1 million people let go. It's going to push the unemployment rate back up over 7%. And then on top of that, everything else that is happening at this particular point, and the stock markets continue to go higher, it's an absolute joke. But the bottom line is that what you said at the beginning of the show is 100% true. You've got two different markets. You've got the cash market, which is the physical market, and you've got the paper market. And because the hedge funds really control the markets at this particular point, it's funny that when you go back to 2008, when the Dow Jones, the last time it was at 14,000, and then it plummeted to 6,500, the thing is, at that point, in 2008, if you go back and look at certain stocks, like General Electric, one of the top companies in the world, General Electric was an $85, $86 stock. Now we're back up to 14,000 after the market has come all the way back from 2008, and a stock like General Electric's at $23. So the market is not what it appears. In fact, when you talk to most people that have money in the stock market, especially the retirement funds, nobody has made money in the last decade. It almost appears to be window dressing. It's almost like they believe in the government that we're stupid, that we really don't know what's going on. Because in the U.S., things cannot get better until the middle class gets better financially. And that's not going to happen for a long, long time. The stock market may be back to around the 14,000 level, but the general public is not in the market. Who's in the market are the hedge funds, and they move the markets with billions and trillions of dollars, and that's what moves the markets at this point. When one stock going up can affect the entire market, you know that the market is not suitable for most investors anymore. So as we're taping the show, with all the confusion that's going on in the marketplace at this point, personal income plummeted, and on top of that, they couldn't come up with the deal between the Democrats and Republicans, and now you're looking at a situation where the news should be so ridiculously negative, and at this point here, the stock market just went positive on the day. So we've got gold trading $1.10 higher as we're taping the show. We're at $15.8160. Silver's up 9 cents. We're trading at $28.70. Platinum's down $10 at $15.71. Isn't that unbelievable that platinum was $100 more than the price of gold last week, and now platinum is actually below the price of gold? Palladium is down $9, is trading at $724. Actually, it appears that palladium is doing better than any of the metals at this time. You got the Dow Jones that's even on the day. You got the Nasdaq that's down 5 points at 3,155. You've got the TSX down 70 points at 12,751. You've got the U.S. dollar going up, and that's another reason why gold has been fluctuating. U.S. dollar's trading up 46 cents at 82.43. You got the crude oil market that was at $98 earlier, or early part of last week, is now trading at $91. So, again, the markets are extremely volatile. In most cases, people are sitting there shaking their head going, how in the world is this happening and why is it happening? But the bottom line is that the markets have a trend, and the trend is always your friend. And no matter what is happening in the market, due to the confusion and the volatility and everything that's going on at this point, the fundamentals still remain the same. When you read what Wall Street is saying, they're negative on gold. When you read what some of the top prognosticators in the world are saying, they're extremely bullish on gold. In fact, there are people saying that we are only days away from seeing a total turnaround in the gold and silver market that's going to take the market up so substantially. So again, all I can say is that I haven't sold an ounce of my physical gold or an ounce of my physical silver. I've got still the same amount that I purchased back 10, 11, 12 years ago. So at this particular point, it's not that I'm in love with the gold and silver market. It makes sense to own that. A couple weeks ago, 3 weeks ago, the U.S. government came out and stated that they have no silver. In fact, the U.S. Mint totally ran out of silver and cannot mint their very successful silver coin program. You would have thought that silver would have increased $5 or $10 based on the news that the U.S. Mint has no silver to mint their silver coins. Then add to the equation that Germany has come out and said that they don't believe that their gold is sitting where it's supposed to be. And the mystery of the missing gold is not only for Germany. A lot of other countries think that their gold may not be there either. A lot of these central banks have taken that gold and basically have leased it out several times. It's really an unbelievable situation, and it sounds to me like theft, of these countries' gold. You would think that based on that news and based on the silver news, that the price of gold and silver would be skyrocketing at this particular point, but they're being suppressed for whatever reason at this time. Also, looking at the charts on the U.S. dollar, it looks to me like the U.S. dollar is getting very top-heavy at this point, and the U.S. dollar is scheduled, and it looks to me like it's getting ready to drop and drop substantially. So gold and the U.S. dollar have a correlation between the two. When gold goes up, the U.S. dollar goes down type of thing. At this particular point, it seems that they're trying to support the dollar, and I think the reason for that is because China is getting upset when the U.S. dollar goes down because, again, it affects their payments type of thing. So all in all, we're going to have to grin and bear it. We're going to have to go through these corrections. At this particular point, the numbers that we need to be concerned about. On the downside, we're trading right now at $15.81 in gold. The very, very heavy support for gold is at $1,500. We do not want to see gold break below the $1,500 level. The silver market's similar. We had minor support at $28.50. We broke $28.50 last week. It came back up to around the $30 level. We're now back at $28. 23 at that particular point was a low that we saw today. So again, breaking the 28.50 level, the very important number for silver is $26. You know, as we get closer to those numbers, $1,500 gold and $26 silver, obviously we do not want to see the market break through those levels. If they did break through the level of $1,500 gold, it could literally fall to $1,350. Silver, if it broke $26, could literally drop to $23.50 in that area. So it would not destroy the market, but we don't want to see the market break below that level. I've been reading several reports lately from people that are brilliant in the market, people that I respect. I know people that Randy respect, and the feeling in the market is that we are very close to another breakout in the gold and silver markets. So again, I would not trade the paper assets. I would not be in gold mining stocks. I would not be in the stock market in general. That looks like it could fall substantially also. So again, the answer is physical gold and silver in combination with other assets to make certain that you're well diversified. And again, even though we're close to the $1,500 level in gold, about $80 away, and we're a couple dollars away from silver, possibly at 26, I doubt that we're going to break through those numbers. I think that the market is going to hold, and I do believe that we are going to see a rally within the very near future. I just wish that the fundamentals and the technicals met up with each other, because again, you've got these hedge funds in the market that all they do is trade for pennies. They're in the market for billions and trillions of dollars. They only need a very short, small movement in the market, and again, they're out. So I think that the gold and silver market will hold their support levels, and then again, I still do believe that we need to break over $1,800 in gold in order to hit new highs, and silver's got to break over $28.50, $34, and then it's got to break over $38.50, and then we should see this market really start to take off again.
Educate yourself about investing in gold and silver, platinum, palladium. The company Harold recommends you use, a Canadian company in business for over 10 years, Worldwide Precious Metals. Their website, www.pmc.com, telephone number 1-866-623-2002. Now, remember, you can start your own precious metals investment account. They will help you do that. Let them educate you as to the ins and outs of doing that. And keep in mind, this is a liquid asset that you have. You can buy and sell with a phone call. Secure storage insured to the full value of your investment. 24/7 online access. And you'll have the use of a full-time investment specialist. Precious metals is what they specialize in. Speak to them, Worldwide Precious Metals, www.pmc.com, telephone number 1-866-623-2002. Get our free weekly newsletter this week. It is a must-read. It's the companion to our radio show. One of the stories that I thought was really important, it was a quote from David Chapman. The new currency wars are still at an early stage. To escape devaluation, the smart money could increasingly move into hard assets, particularly gold. Gold has a 3,000-year track record as money. The current fiat experiment is only about into its 42nd year. The experiment is teetering, and the end game may soon be upon us. One of the other stories that I thought was very important, you can read it in its entirety in our newsletter, from Walter Zimmerman. He says, every indicator I have shows the stock market is going to tank. And this is really one of the most important things that he has to say. Most of the rally in the stock market since 2009 can be chalked up to the Federal Reserve's attempt to create a wealth effect through higher stock market prices. This only exacerbates the downside risk. Why? The stock market no longer is a leading indicator for the economy. It is instead a reflection of Fed manipulation. And he says, pushing the stock market higher while the real economy languishes has resulted in another bubble. The next down leg will not be a partial correction of the advance since 2009, but it will be another major financial crisis. The worst is yet to come. And you can read that story in our newsletter. Get our newsletter from Worldwide, 1-866-623-2002, the website, www.pmc.com. One of the other important items that we have in our newsletter, and this was a story that King World News, they interviewed Eric Boyd, the CEO of Agnico Eagle, and I think he gets it right. He says, what we've gone through in the last few weeks is, I believe, an overestimation of the global economy's ability to rebound. The markets are looking to grab onto any positive news, and the news is then used to suggest that quantitative easing has to end earlier. I don't believe QE will be ending anytime soon. Whether you look at Europe or the United States, the underlying issues surrounding the massive debt have not been fixed. Despite the euphoria we've seen with regards to the U.S. dollar and the economy improving, the reality is this euphoria is not going to last. Europe has its own issues with their debt problems, so they haven't fixed their underlying issues either. In the past, the authorities will end up choosing to inflate their way out of this, which ultimately will be very good for gold. Gold will continue to be volatile here, particularly in the very short term. But I think as people begin to realize, despite news coming out to the contrary, the issues are far from being resolved. As this reality sinks in, money flows will accelerate into gold. We will also continue to see more central bank buying, so I expect gold by the end of the year will reach its all-time high as it goes well over $1,900. And that's Sean Boyd, CEO of Agnico Eagle. Harold, I agree with him 100%. In fact, Michael Pinto, he mentioned as well, all the hype about the imminent exit for the Fed is just noise. Not only will its policies be in place for a very long time to come, but the odds actually favor an increase to the current amount of annual, they're calling it QE, rather than a decrease. Investors need to understand that since there's no easy escape for the Fed, they're relegated to just bluffing about an actual exit. But bluffing alone will not be able to save the U.S. dollar or the economy in the long run. It's important for readers around the world to understand that this is why the sell-off in gold is about to come to an end. And I did watch a bit of Ben Bernanke being interviewed this week by Congress in the United States, and there were some congressmen asking how quantitative easing unwinds. And the truth of the matter is, Bernanke gave them some very simple answers. The truth is, I think, Harold, the Fed doesn't really know how this all ends, and it doesn't even know how it all ends up being unwound because we're into uncharted territory.
Well, you're 100% right. It's like the derivatives market. It's in the quadrillions of dollars. It's unregulated, and most banks and financial firms that use them don't even know how to unwind them either. So I think that, again, we're in a scenario that is so severe, that is so confusing, that even the Federal Reserve and the banks and the brokerage firms don't know what they're doing. So at this particular point, with all the confusion and the fact that nobody seems to know what they're doing at this particular point, is another reason to remain very, very as far as not taking any risk type of thing, very conservative, obviously. So you don't want to have anything heavily leveraged. You don't want to have anything of any major risk at this particular point because, again, you can see that the markets can turn on a dime. A lot of prognosticators out there at this point feel that gold and silver are getting ready to make a massive move on the upside. You know, we've seen it so many times before. We saw in 2008 when the Dow dropped from 14,000 up to 6,500, we saw about a 30% drop in gold and silver, but then gold and silver came back and made brand new highs, and I do believe we're going to come back and see the exact same thing. At this point, you've just got these hedge funds that are wreaking havoc on the market, and they're selling whatever they want and buying whatever they want, and that's what's moving the market. Again, in 2008, when the Dow was at 14,000, General Electric was an $85 stock. We're now back at 14,000, and General Electric is a $23 stock. The $14,000 price on the Dow does not reflect the marketplace. So the thing is that what does a small investor do? Again, a small investor that cannot take the risk of losing all of his money like they did back in 2008. In fact, all you have to do is go back into your RSP and look over the last 10, 11, 12 years and realize that the stock market has gone all the way up and you haven't made a dime as far as your retirement savings plans go. So I'm still sticking with my positions. Gold and silver, it's not that I'm a diehard or anything like that. If I felt that the market was over, I'd be out of it. I certainly don't want to lose my money, but I don't believe that in any way, shape, or form. I believe that we're in the right market at the right time, and once all the dust settles, I believe that we are the ones that are going to be standing the strongest.
The telephone number to connect with Worldwide Precious Metals, 1-866-623-2002. Let them earn your business, explain to you why you should own physical gold, physical silver, have your own precious metals investment account. speak to them about the ins and outs of this market and what the possibilities are. www.pmc.com, 1-866-623-2002. One of the articles that is another must-read in our newsletter this week, it's a chart of the week in the gold section, zerohedge.com. This is from the website. February strange divergence into precious metals. February has been an odd month for precious metals, to say the least. On-again, off-again fears of Bernanke removing the punch bowl, and endless sell-side strategists discussing great rotations and the end of the gold cycle have led to prices for gold and silver sliding notably. However, while all this price deterioration has been going on, demand for physical gold and silver have surged entirely, disconnecting from January's apparent demand to price correlation, and silver set to break all-time record demand highs for February. We know who was buying in January. A Reuters report to Russia and Turkey were significantly adding to their bullion reserves, and while the divergence began between demand and price coincided with the Chinese New Year's, leaving a large marginal buying nation on the sidelines, we suspect the drop has more to do with hedge fund reflective selling now caught offside. It seems at least one smart player was using lower prices to build their stack, manipulation or no manipulation. If you look at the charts we have, the physical gold chart, and you can get this from Worldwide, 1-866-623-2002. Take a look at this chart. This is a U.S. mint chart for gold. The demand is straight up, and the price is down. The same for silver, and February demand for silver was at a record high. Harold, this is what says to us, we're in the right position still, and we have to weather the storm, but eventually what's happening in the marketplace will correct itself without a doubt, because when you have all this physical demand, eventually the paper price will have to reflect it.
It certainly will. And again, it's just shocking that it hasn't done so at this point. I don't know where the investors' heads are at, that when you look at a scenario like silver, it's tailor-made for most people. The fact is that there's major financial issues. You got currency devaluation, which is very bullish for precious metals, and then on top of that, you've got massive shortages that the governments themselves are admitting to. How in the world does a market not rally based on that kind of news? All it tells me is that, again, the governments are in so much trouble that they play with the markets to suit their own needs type of thing. And that's the thing that's the most disturbing to me of all, is the fact that we're not playing on a fair playing field. We're not playing in a legitimate public market anymore. Free market is the key word, and that's what these markets are supposed to be about. The futures markets, as an example, and the stock markets are gambling casinos. That's what they are. You can leverage, you can place your bets, and if you win, you win. If you lose, you lose, and you can make some money, but you can lose more than what you put in type of thing. So it's not the same markets that we grew up with. Again, when companies like General Motors go bankrupt and those type of scenarios happen, we have a totally different market, and the market is controlled by hedge funds at this particular point. But again, the trend is always your friend, and there's just no doubt that with currency devaluation and inflation coming in the form of higher food and oil costs, there's just no doubt that gold and silver have to go up eventually. So again, this is a minor blurb. It's just been 18 months at this point here, and we are so used to this bull market in precious metals that this is disturbing for a lot of people. A lot of people have put a lot of their money into the precious metals market because of the fundamentals that are present in the market at this time and have been for the last 12 years. So, again, I do not believe in any way, shape, or form that this move in the metals is over, and that's just not somebody who's sitting back and saying, boy, I hope everything's okay. I've been in these markets for 35 years. I've seen pretty well everything happen in the markets, and again, what I'm seeing at this point where it is concerning, I do believe that we will end up on top again. I do believe that hard assets, gold, silver, and diamonds as an example, will continue to do extremely well.
And a lot of it, it's all based on monetary policy of what's happening around the world. Money printing, debasing currency wars. And a great quote from Mark Faber this week. People always ask, well, you say this is going to happen and that's going to happen. We don't have an exact date. But as he puts it, I think for a system to change without revolution or significant social upheaval is very difficult. Frequently, if there is a revolution or a reform, it gets rather worse than better. And he says, so usually major changes occur as a consequences of trends that have prevailed, which are unsustainable in the long run, that have created huge damage, and then occasionally changes do occur, but it can take a long time. I remember prior to the financial crisis, we were on the air saying we felt there was a financial crisis based on what we were seeing in the housing market and what we were seeing on Wall Street. And we believe the same today, but for different reasons. Obviously, the way the monetary policy is around the world, currency wars, eventually that has to come to a head. And kicking the can down the road in the United States for the sequester or the fiscal cliff, that does not get it done. Even Ben Bernanke was saying the politicians in the United States need to do something, and they're not, and that is the biggest problem. Learn about investing in hard assets, gold, silver. Also, we'll talk about diamonds here shortly, but gold and silver through Worldwide Precious Metals, 1-866-623-2002, the website wwpmc.com. Come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert Harold Siegel. We're taping the show on March the 1st, 2013. Our time is 9:09 in the morning. Radio show runs News Talk 1010 in Toronto, CFRB, also 630 CHED Edmonton, and News Talk 770 in Calgary. For those that listen in Edmonton next week, we're going to be on prior to the Oiler game, 2:30 to 3:30 in Edmonton because of the Oiler game. You can listen online, obviously, through Harold's websites, HESradio.com, RareColoredDiamonds.com. The shows are archived there. Listen on the radio, and we have a podcast through iTunes. Type in World Financial Report on Radio, and you can find our podcast there. And the show is portable. You can take us anywhere you go. Harold's Daily Market Commentary is there as well. It's all for you at iTunes. You can listen on your iPhone, iPad, or iPod, any portable device. To invest in precious metals, the company Harold recommends you use is Worldwide Precious Metals. Speak with them about investing in gold, silver, platinum, palladium. Their website, wwpmc.com. Telephone number 1-866-623-2002. And remember, this is a liquid asset you can buy and sell with a phone call. You'll have secure storage insured to the full value of your investment, 24/7 online access, and the use of a full-time specialist. This is all they do, specialize in investing in precious metals. Harold's websites, RareColoredDiamonds.com, RareColoredDiamonds.com. He also has his auction website, hsfineauctions.com. Will let you know when the next auction is. Our featured diamond this week, it's in the newsletter. You can get our newsletter from Harold. Connect with him at 1-800-432-1022 or rarecoloreddiamonds.com. This is an amazing diamond. It's a .52 carat oval cut, fancy, vivid, purplish, deep pink argyle. When you see this diamond, it is stunning, and Harold was telling me off air, this is the type of diamond, if you were to potentially recut it, it could be classified as a red, Harold, and this is a stunning diamond to say the least. We had a diamond at auction about a month ago, and it sold, actually it was supposed to sell for 60 to 80, that was the estimate, and it was a fancy vivid purplish pink. The estimate on it, 60 to 80, it sold for $338,000, 4 times more than what was expected. This is a diamond that is very, very similar, although it has that deep pink argyle quality that the other one didn't.
You bet. This is a really spectacular diamond. That was a great auction. You know, the diamond that sold at auction, it was a 51 pointer, so it's the same size as this one. It was round. This is an oval. It was a fancy, vivid purplish pink, which is a phenomenal color, but it was not an argyle diamond. So they anticipated it would sell for $90,000, and it sold for $338,000. We have the report here. Anybody who wants that, we'll send that off to you. That's just reflective of what's happening in the pink pink diamond market. The Argyle mine produces 95% of the world's pink diamonds. It's scheduled to close in 5 years, which is, again, 2018. Give it 2 years for these diamonds to run out, and these diamonds will increase more than almost any asset that you could ever imagine. A diamond like this could go up 10 times what the prices are today. So Argyle Pinks is such a phenomenal investment, and again, I've been in the investment business 35 years. I certainly know what happens when demand for a product is high and supplies are low, and when those type of scenarios happen, the odd time it does, especially in the diamond market, I like to take advantage of it. We spend over $40 million with Argyle to buy their production for the next 2 years. So we will have the majority of Argyle pink diamonds. In fact, we just got half of our supply this week of 160 brand new Argyle pink diamonds. The amazing thing is that last year you could have bought an Argyle pink earlier in 2012 and 2011. You could have bought them in the 30,000 range, 25,000 range, and up from there. But then the prices started to go up strong, and the closer we get to the mine closing down, the more and more and more these prices are going to increase. So with our new batch, with the new 160 Argyle pink diamonds that we just received, they're all graded through GIA, they're all laser inscribed, they're all the diamonds that you need to make the money that you need to make in the diamond business. Well, we've got some magnificent bubblegum pink. They're the fancy light pinks and the fancy light purplish pinks, and we have some Argyle pink diamonds starting in the $15,000 range. We never ever had diamonds like that before. But again, when you buy the entire production, as we did, you get all aspects of the business. So we have all price points. We have Argyle pink diamonds now starting at about $15,000 and going all the way up into the seven figures. In actual fact, the most difficult diamonds to get of Argyles are the Vivids. They are the best color and by far the most expensive. These diamonds are now starting to double in price every 2 years. That's how much these vivid Argyle pinks are going up. Well, just so you know, we have got the most beautiful, vivid Argyle pink diamonds that you could ever possibly imagine. And then on top of that, we have several of them, 11 of them, that are over a half a carat. Now, Argyle has said to us that half-carat Argyles are so rare that it would be a smart idea to hoard them. Where it does make sense for us to do that, again, we want our clients to profit from these. So I'm not buying these diamonds so I can profit personally, even though I do have my own collection of these diamonds also. We bought these diamonds so our clients can make money in the rare colored diamond business. So we put up $40 million to buy the next 2 years of production from Argyle, and we just received 160 of our newest diamonds. Again, some of them starting in the 15,000 range. So I was getting concerned because there's a lot of people that want to invest in Argyle pinks, but just didn't have the $40,000, $50,000 to buy those type of diamonds at that time. Now we have our new supply, and we have some diamonds for everybody. So I'm extremely excited, Randy. These diamonds are magnificent. It's going to take a while to video them, but we will have them up on the site. A lot of these diamonds are going to be on a first-come, first-served basis. So we have the fancy light yellows, and the fancy light pinks, and these are all numbered Argyles, and the prices are very friendly. So these diamonds are so soft and beautiful. When you see a fancy light pink, it's just the most beautiful color pink. Some people love the softer colors like the fancy light and the fancies, and some people love the deepness of the fancy deep pinks and the fancy vivid. So we have all of those for our clients. We have 160 brand new Argyle pink diamonds. We have a larger supply of Argyle pinks than anybody in the world, but nobody put up the money that we put up, and that's for our clients to do well in these markets. So we're very, very excited. We love the Argyle pinks. They're going up by at least 25% a year. However, the closer we get to the mine closing down by 2018, these diamonds will start to take on a life of their own. The thing is that interest rates are so low right now that if you put your money in the bank, you're going to get 1 or 2%. If you put your money in the stock market, you have a chance of losing it all. There's very few investments out there at this point that can give you any type of return on your invested dollar. It just so happens that the Argyle Pink Diamond market is that market that can give you 25% a year and give you the home run that we're looking for, that we used to be able to get back in the 90s in the real estate market and the stock markets, but those days don't exist anymore. The diamond that we're featuring this week is one of the rarest Argyle Pink diamonds you could ever own. A diamond like that in 10 years from now will be a 7-figure diamond. So go to our website, rarecolordiamonds.com. Look at our Argyle Pinks. Again, the new Argyles that we just got in have not been put up on the site yet. We're starting to film those over the weekend. But again, you can now get involved and get into the Argyle Pink Diamond market starting at about $15,000. The other diamonds that we love and recommend very highly are the D Flawless Whites. D Flawless White diamonds, as volatile as the markets are right now and as concerning as they are, the stock markets could plummet the same way as they did back in 2008 when the Dow dropped from 14,000 to 6,500 in only a very short period of time. If you have all of your money sitting in the stock market and are afraid to get out, or because of tax reasons don't want to get out, there is a way that you can hedge yourself by the purchase of D Flawless White diamonds. They're negative correlated to the stock market. Means in 2008 when the Dow dropped 50%, these diamonds went up 50%. If you got $500,000 sitting in stocks and can't sell them at this point, a $500,000 D Flawless White will protect you against a declining stock market and give you profits like you can see in almost in like no other market. These D Flawless Whites are used in Europe as currency, and with the new fund coming out that is going to only purchase D Flawless Whites, you're going to find that there will be a shortage of these diamonds. So if you can afford them, they're 10 times the price of a normal white diamond. 10 times the price means to get involved in a D Flawless round white diamond over a carat, you're talking at least $70,000. However, those diamonds in the next 10 years can be worth, 5 to 10 times that amount. These are amazing investments that never ever go down in value. The other diamonds that we recommend are yellow flawless diamonds. There's thousands and thousands of yellow diamonds out there, and if you own a yellow diamond that's not flawless, you're not going to see the returns that a flawless yellow diamond will give you. They increase by 20 to 25% a year. They double every 4 years in value, and during times of high inflation, they've gone up as much as 500%. In 1980, when we had extremely high inflation and the beginning of very high interest rates when they went up to 22%, yellow flawless diamonds were $500 a carat. Now they're $20,000 a carat. You tell me any other investment that can give you those type of returns with the safety that you have in a market like diamonds that have never fallen before because there's so few of them and they don't trade on exchanges like commodities and stocks do. So again, you don't get that ridiculous volatility that we're getting in the marketplace right now that is causing everybody so much concern. To put away a diamond for your retirement is a very smart thing to do. You put $20,000 into the stock market for retirement to your RSP, and you haven't seen any return in the last decade. But you put $20,000 into an Argyle Pink, and in 10 years from now, that $20,000 could be $200,000. And that's the way the diamond market is. So, again, I've never been more excited about a market, as I get upset at times because the commodity markets are not doing what they're supposed to be doing. Then I look at what's happening in the diamond business, and again, realizing that most of my clients own diamonds, my family owns diamonds, I own diamonds, it's the safest investment out there, and it's going to give you the return that you need, that you're not getting in any other investments at this time.
Speak with Harold at Rare Colored Diamonds about investing in hard assets. Rare Colored Diamonds today. Our featured diamond, this is a must-see diamond. It is a 0.52 carat oval cut, fancy, vivid, purplish, deep pink Argyle. The video is online at rarecolordiamonds.com. Click on the featured diamond of the week. It's also in our newsletter. If you'd like to get our newsletter from Harold, speak with him at 1-800-432-1022. For those that would prefer to do business over the phone, Everything is personal and private, 100% confidential. The telephone number, 1-800-432-1022. The website is rarecoloreddiamonds.com. And Harold, as we start to see scenarios where there's a potential of an Argentine default, they are fighting not to pay bonds that they owe money on. We also had David Chapman, that quote we read earlier about currency wars, and the experiment is teetering and the end game may soon be upon us because of how the world is treating currency. In fact, there was even an EU minister who came out and said, well, everyone else is manipulating their currency and we should manipulate the euro. Why not join in and compete with everyone else? Then we get into a scenario where the whole world is manipulating their currency. As a result, it's a massive mess, and it's not a surprise we're seeing diamond prices do well at auction, and auction season is starting to pick up here. Once we hit into March and April and May, we'll start to see more auctions. And Harold, I suspect the prices will continue to be strong, and would not surprise me in the slightest, because of currency wars, that we see huge price increases coming.
I believe that will happen, and the thing is that the other thing about diamonds is that it's the only asset that can be sold in other currencies. Gold is traded in U.S. dollars, oil is traded in U.S. dollars. In most cases, most commodities are, but when you look at diamonds, we can hold an auction in England, we can hold an auction in parts of Europe, in China, in Japan, anywhere we want. In fact, I'm incorporating my auction business also in Monaco, in Europe. One, for tax reasons, but two, to be able to reach the European investors that we so need, because their currencies, no matter what's happening in Europe, with the British losing their AAA credit rating, with currency devaluations and things getting bad again in Italy and Spain and Portugal, that type of thing. But these are the only assets that can be sold in another currency. So we're very excited about the diamond market because, again, it's an asset that we believe that is so important that if you put it away, it's not a short-term investment. If you're going to buy a diamond today and sell it a year from now, don't even bother. You won't make any money in it. You won't lose on it, but you won't make on it. And the reason is that you're getting involved in diamonds is to make money. It's one of the only few assets that you could actually do that with at this time. So I love the diamond business. What's happening with Argyle is unprecedented. Again, we've only seen this really one other time where a mine has closed that produces 95% of that particular diamond. And if we don't take advantage of this, this is something that we will think about for the rest of our lives. And the fact is, it's happening right in front of us. Again, that auction that happened last week, where that half a carat round, fancy, vivid, purplish pink diamond, instead of selling for $90,000, sold for $338,000. If that doesn't tell us what's going on in the diamond business, nothing will.
Speak with Harold about diamonds. RareColoredDiamonds.com, 1-800-432-1022. You can take a look at his auction site, too. Take a look at what has been auctioned in the past. Get an idea of what's involved. We'll announce our next auction when we have that date. It's hsfineauctions.com. The website is rarecoloreddiamonds.com. Telephone number 1-800-432-1022. The most secure and profitable investment, years in the making. Rare Colored Diamonds. And Harold brought this market to us. And there are a lot of people out there who are competing now. But the truth is, Harold, when it comes to competing with you, they just can't. As a prime example is all these Argyles that you picked up. You, through your contacts, and because your website is so well known and so famous all around the world, you go into top name jewelry stores all around the world. They know of Rare Colored Diamonds. The reason you're getting access to these rare and exclusive Argyle pinks is because of your connections.
And money. Don't forget, it takes money to be in this business. And again, when you look at people that have been in the diamond business, guys like Lawrence Graff, who did not start out to be that wealthy, is now a multi-billionaire. So the thing is that diamonds, certain diamonds, not all diamonds, but certain diamonds, you put them away for the right period of time and forget about them, and you're going to do very, very well with them. With these Argyle pinks, it's an amazing scenario because, again, the one mine that produces 95% of them is going to close soon, and it's just not that far away. It's only 5 years away. If you're in your 40s, 50s, 60s, 70s, and are not putting away money for retirement or nowhere close to it, this is an asset that you should definitely look at because, again, it will give you the returns that you need. It will get you to where you need to go. And, again, there's no risk to the investment. It's an investment that has never, ever fallen in price. There's not a chance that I can see that they're going to discover another mine that produces pink diamonds. And even if they did, it takes over 10 years to get a mine working. So the fact is that what's happening with Argyle Pinks is a phenomenon, and we put up the money in order to get all of the diamonds that we needed so our clients of all price ranges can get involved in the Argyle Pink market. So again, where we did not have this before, we do have it now, and we now have Argyle Pink diamonds that started about $15,000, and just 2 weeks ago, our least expensive Argyle was in the $40,000 to $50,000 range, which again shut out certain people. So I'm extremely excited about this. Just so you know, a fancy, vivid, purplish pink Argyle diamond. One sold from the Argyle tender in 2012. It was the top diamond of the year. It was the Argyle Siren. It sold for $2 million. So it was a carat and 32. I just received from Argyle 3 fancy, vivid, pink Argyle diamonds right around a carat. These are nearly impossible to get. They're .96s, so they're almost at a carat. These diamonds will be in the $1 million range very quickly, and these are diamonds that are about half of that price at this particular point. So again, I've got 11 diamonds that are over a half a carat that are in the vivid pink Argyles, and these are the diamonds that will literally make you a fortune. Now, obviously, not everybody can afford those diamonds, but we do have some vivid Argyle pinks starting at under $50,000, and in less than 10 years from now, those diamonds will be $500,000 diamonds. These 1 carat vivids will be in the range of probably $2-3 million a carat, and those are the diamonds that we have.
And I think for some people, the truth is it's hard for them to wrap their head around investing in a diamond because for most people it is relatively new. The truth is, though, this has been going on for hundreds of years. Kings and queens, royalty, the very, very wealthy, they have always owned that alternative asset, the hard asset, diamonds. And that's why you need to speak with Harold. Let him educate you about this rare diamond market, rarecoloreddiamonds.com. The featured diamond of the week is a 0.52 carat oval cut, fancy, vivid, purplish, deep pink Argyle. It is a must-see when you go to Rare Colored Diamonds. Click on the featured diamond of the week. It's like going to a museum online with the rarest and the greatest diamonds in the world that you could potentially invest in. Speak with Harold, rarecoloreddiamonds.com, the telephone number 1-800-432-1022. And we have about 2 minutes left here. And Harold, what we're seeing is Rio Tinto, they own the Argyle mine. Now, they would like to get out of the diamond business. It's not because it's a bad business. It's a difficult business, mining. Mining is very difficult. They recently laid off a fair chunk of people at the Argyle mine. No new mines are being found, and the mining business is difficult. That says to me, and we have about a minute left, Harold, that scarcity is going to be a huge factor going forward when you take into account that China and India, they're starting to look to diamonds beyond gold and silver to invest in.
All we're trying to do, and you're 100% right, Randy, is to get the listeners to our radio show in a good cash position. We want to make certain that with everything happening in the world that our clients are safe and making money, and I'm very proud of the fact that we were able to bring this diamond market to our Canadian clients.
Thank you very much, Harold Siegel, for your knowledge and another great show.
Well, thank you very much, Randy. Everybody have a wonderful weekend and a very profitable day.
Don't forget, for those listening in Edmonton next week, we will be on prior to the Oiler game, 2:30 to 3:30. So in Edmonton next week on the radio, 2:30 to 3:30. Speak with Worldwide Precious Metals. This is the company that Harold recommends you use when you invest in gold, silver, platinum, palladium. Start your own precious metals investment account today. They specialize in this. They can help you all the ins and outs. It's a liquid asset you can buy and sell with a phone call. You'll be dealing with a precious metals specialist. Call them 1-866-623-2002, wwpmc.com, and connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Learn about investing in hard assets today. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.